Futures trading is risky and can result in substantial financial loss. Never put a futures position on without a stop-loss order in place.
Good morning, good afternoon, good evening, traders from across the globe. Welcome to Short-Term Trading Live with Oscar's Friday Roundup. Well, we had an exciting week. I know you guys were with me. Yesterday, we had a little bit of a punch, right? But then Friday, we came right back. We stood in there, boom, boom. We made some money, cleaned right up, got out at the lows, and got out of the market's way. So pretty exciting. I know we got a couple of things that we covered during the week. In fact, I think that there's something that I've put out there for you guys, and there's all kinds of buzzing going around on my forums about it, which is great. So I'm going to do a bit of a segment on it now. We started this week with the mirror image formation coming in the Eurocurrency chart. We ended the week last week with seeing 3 of them on the Japanese yen chart, and they were pretty exciting and they worked well. The Eurocurrency chart was fantastic. We followed it all week. What a nice breakout. So we'll do an illustration about that in a little while, and we'll talk about the S&P market because it's very, very interesting here. So round up a couple of things that we did for the week. Again, we'll talk about the mirror image, very important. I got some pretty charts. We'll see what you think about them. Traders, something I call curve fitting. We'll go back to the mirror image for a moment. Curve fitting is when you take an indicator, you put it over a chart, you overlay it on top of a chart. It doesn't give you any signals, and you go in and you start messing with the parameters until it finally looks more like the market. Well, a lot of times, if you've had an indicator that works well, but you put it on a market and it doesn't work, and you start fixing it until it does work, that's called curve fitting. If you curve fit your indicators, you're really fooling yourself, because what you're doing is you're saying this doesn't work on this market, but I'm going to mess with it until it looks like it does. Well, a picture of something that looks like it works and something that actually does work when you apply it to trading are 2 entirely different things. We've been talking about mirror images in my forum. Everyone has gotten very excited over a mirror image that they believe has developed in the S&P market. And the mirror image that they were looking at, although I won't get into a big illustration at the moment, it was a market that opened, dropped, closed, and then the next day it sort of opened, rallied, and closed, but the highs and lows were different. The high was up, the low was here, the next day the low was a little lower, the high was a little lower, and you can't just qualify that. You cannot just qualify this as a mirror image. A mirror image starts off in 3 parts, by the way. You have a high and a low that are exactly the same or very close for 2 days in a row with absolute opposite opens and closes. These you need to have before you can call for a mirror image. So I'm going to get into it a little bit in depth here, but I wanted to say the mirror image has been working well, and I'm glad you guys are finding them, but I want you to understand them a little better, because again, it seemed like guys on my forum were curve fitting the mirror image today, and you cannot do that. It will take the money right out of your account. You cannot curve fit. So let's go over a couple of charts, and then we'll talk about that. So before we get to the mirror image, I want to talk about something else that I know I've put up in front of you guys during the week. And I was talking about the S&P chart. And I mentioned how the S&P has to get above this resistance level of 1462 to 1477. Otherwise, the market will turn over and have a big break. So we've been staying with the S&P. We've been trading it every day. You've seen the OMNI flip from red to green, back to red. Had a couple of nice days this week. The important thing about this chart is to see what it's doing here. We had a major move which ran into a resistance level and topped and then broke. The market rallied up and then had a little bit of a setback, rallied again, had another bit of a setback, which is very characteristic of any market trying to move higher. However, the fact that we had a major drop and didn't have a major rally right out tells me, especially that it's the S&P market and it's got huge volume and huge open interest, that the market, the fact that it didn't run straight back up and make new highs, we're having some trouble here. We're having fundamental problems with the pricing of the market, And if we cannot take out these highs above 62 to 77, 1462 to 1477, if we do not get above and start creating a new level here, we will get that downside we're talking about. However, the chart has been looking good, and take a look at what we have, the formation right here. If you draw a simple trend line right across here, you will see that we're actually beginning to break out. Today, we broke out above that trend line and smacked into that resistance level that I've been talking about between 62 to 77. But the fact that you can take a trend line from the high to the previous high from a few days back and draw it and see we settled above it, that's pretty positive for a market. Hopefully we will get what I've been looking for and hoping for, which is that run straight up into new highs and take this market to new levels so we can continue to stay long. OMNI has been on it. OMNI's been catching these flips. If you were with us today, OMNI got a short, got us out at the lows and said that, or very close to the lows, and said that's it, the S&P and NASDAQ, we likely are going back higher, made us jump out, and lo and behold, we settled on the highs of the day. So very interesting, but bear in mind, if we cannot take out this zone, my red zone here, 1462 to 77, you're going to get the break that I've been talking about. Very interesting. Keep your eye on that. There was also a mirror image formation that you guys were talking about in the forums I referred to a bit earlier in the S&P. It is not a mirror image, guys. I'm sorry to say, but you know, when it comes to mirror images, we have to qualify them first before we call them. And if it's not an actual mirror image, you can't trade off of it. You cannot curve fit these mirror images to fit what you would like to call a mirror image. It will not work that way. A mirror image has to be the first and second leg 1 and 2, must be equal distant, high and low, with opposite opens and closes. If you have that, then you can look for bar 3, which will lead a little bit into the mirror image and run back out. The market itself acted as if it would around the mirror image, but we cannot call what we've seen in the last 3 days in the S&P market a mirror image in my book. Qualify them first, make sure they're right before you consider trading off of them. Now we're going to go look at the Eurocurrency mirror image that we talked about during the week. It was fantastic. We started off last week, we had a high and a low, opposite opens and closes on 2 days. The highs and lows were just about exact. Leg 1 and 2 are in place. And remember that, ladies and gentlemen, you must have the same size bars on leg 1 and 2 with opposite opens and closes. There's the only way you can begin to call leg 1 and 2 of a mirror image. If it's one leg like this and the other leg like that, that is no mirror image forming. That is just 2 bars on a chart. The mirror image must be a mirror image of the day before. Leg 1 and leg 2 need to mirror one another. Hence the name mirror image. So be careful, guys. Do not curve fit your mirror images. They will not work that way. So again, Japanese yen, Eurocurrency, we had a mirror image. We were expecting a possible breakout to the upside because bar 3 came in, dipped into a mirror image area, and started to move higher. Lo and behold, the next day, the market did move higher, and then the next day, opened, dropped, and closed. Now, you've just heard me say you need to have equal distant highs and lows to call a mirror image. Well, we had equal distant highs and lows here when we started calling it a mirror image. So I allowed this one to go only because it was already part of another formation. So I said, okay, well, this one will kind of qualify as leg 2 of the two-sided mirror image because you already have one for sure qualified. So don't let me confuse you with that, guys. I'm not a hypocrite to say, oh, this is a mirror image, but the ones you guys pointed out to me wasn't. This I'm including in the package that already began. That is a mirror image right there with this bar telling us it's going higher. Then created, which is rare, another drop in the opposite direction and a close opposite this bar. So I said that is a side-by-side mirror image. Whatever way we come out of that is the signal. You cannot trade a mirror image until you know which way you're going to come out of the formation. So here we go with the next day. On the next day, mirror image, what I called side-by-side mirror images, the market peeked its head down a little, but never came out of the formation on either side, so we still had no signal. The very next day, the market finally decided, let's break out. It broke out of either end of that mirror image, and I said, whoa, we have a buy signal, ladies and gentlemen. I got on the tube and said it, and I sent it out in my site at the OMNI and said, hey guys, we got an OMNI, we're going to buy this here. We have a buy signal breakout above the mirror image. And I also said, the likelihood is that you're going to take this and we're going to move it here. And that's going to be a possible projection. Well, things are starting to look pretty good because we ended up coming out of the mirror image, rally 1, rally 2, up nice and high. I spoke to you guys about this yesterday in yesterday's video. And finally, by Friday, look at that move. Let me tell you something, ladies and gentlemen. If you don't think that was a money-making opportunity, you're not paying attention to markets and you're not paying attention to your technical analysis. We talked about this on a Thursday into a Friday, a Monday, Tuesday. We said wherever it breaks out of the formation, you can ride that at least 2 full days. Breakout day was here. Boom, 1. Boom, 2. It looks like it has much higher to go. We got as high as 135.88. When we started with this mirror image, we were somewhere around 133.20. Got all the way to 135.88 in the same week when nobody was calling for a massive bull that I knew anyway. Nobody that I heard was talking about a big run-up in Eurocurrency. In fact, in my forums and a few other places I was looking, people were telling me that we're ready for a downturn here. And I said, well, that may be possible, but until my mirror image tells me which way to go, I have no opinion. Once we had the breakout, I had an opinion. I gave it to you guys, and there it worked right before your eyes. How interesting is that? So, ladies and gentlemen, stay with this mirror image formation. Do your homework on it. You won't find it in textbooks. You're not going to find it in anyone's courses. And by the way, if you hear this mirror image being taught to you by anybody, call me. It's mine. Well, let's see what happens with this. Anyway, it really, really works well. I'm glad I've showed it to you guys. I'm glad you've been finding your own, and it's been quite exciting. So remember, that's a real lesson to be learned here with that mirror image. Well, 2 lessons. A, they work really well, but you have to wait for leg 3, and then you have to wait for the breakout. And B, do not curve fit your mirror image to fit what you want to see. It has to be right before you can trade it. For me, I looked at it and said S&P is not qualified for mirror image. I turned my head and never looked at it for a mirror image again. I won't look at it again until I find equal distant highs and lows. Then look for leg 3. After all 3 pieces are in your picture, then you have a mirror image. Then day 4 and 5, you can trade it. If you think you found mirror images, guys, shoot them off to me. I will qualify them for you until you get to learn it a little better. But hey, good looking out in that S&P because yes, it was close. But the fact that it wasn't right on, we don't want to just call any 2 bars that are close a mirror image again. That's curve fitting. So the lesson there is do not curve fit your analysis to a market. Let the market fit itself into what you're doing. We talk about always sticking to your guns. Always stick to your plan. Always stick to your plan. You hear Oscar say, stick to your plan. Never move. Don't move your stops unless you're taking profit or protecting profit. Well, here's what happened to me, and you guys are here witnesses. I got on this video Thursday and said, OMNI says down. Oh, I don't want to do it. I think up. It's insane. But I'm taking my OMNI trade because my emotions told me we're going up. OMNI can't be right. The OMNI said, well, we don't trade emotions. We trade signals. OMNI's signal was down. We took the short. We made money. Oscar would have been wrong. OMNI would have been right. I never let my emotions get in my trading. Ever, never. Always stick to your plan. So what did I do? I said to you guys, I'm afraid to do it. I'm sticking to my plan. NASDAQ, S&P, nailed. We cleaned them up, sticking to our guns and sticking to our plan. It is so important that you stick to your plan and not cancel your stops and not change your mind once the market opens. I reiterate this in my videos time after time. It is so important that you do that. You have to withdraw those emotions. You have to stop analyzing once you've done your analysis and you've come up with a plan for the day. You execute your plan. You put your stops in, and always first, put your stops in and let the markets move. Don't run from them. Don't cancel, replace orders. Don't say, well, the S&P's doing this and it should have been doing that and I wanted to buy bonds. I'm going to move my bond order now. Who cares? Yes, they do. They correlate with one another. The markets interact with one another. They move around. Some force others to move. That is not for us to decide. Let the markets do what they're willing and going to do. We're here to jump in and jump out at opportune times. This morning, when I sent the flash update to you guys, we were short NASDAQ. The high was 1833. We were short at 1832 and a half. I flash updated you guys when we were trading 1817 and said, let's run for the hills. I think the low was 1817 and a half for that portion of the day. We got out. The market took off, started to move a bit higher. In fact, when we got out of S&P, we did the same thing with S&P, but we waited a little longer. The S&P dropped a bit more. When I sent the flash update to get us out of S&P at 1454 and a half, or 53 and a half actually, the low was 52 and a quarter, if I remember right. That was the last chance. The moment I sent that flash update, we went zing and went straight up, but we were out. We took our trade. We stuck to our guns. We took our short. The market dropped. We got out at the end of the momentum move on the downside. Finished for the day. Done. That's it. I stuck to my plan. My plan was not to get back in again and try to get shorter. My plan was to trade once, make sure it works. If not, take my stop, be done for the day. That's what I did, and everyone who followed me had a good day. Sticking to your guns, once again, we had a loss on Thursday. Does that shake me? Not even for a moment. I came out with my boxing gloves to let you know we're going to stand there. You got to take the punches. But you know what? I wasn't rattled this much. I was prepared to lose for the next 5 days in a row and never even bat an eye at it. Because we're short-term traders with a long-term plan. You're going to get losses. It's par for the course. It is an integral part of studying the futures markets, or any market in general, any market for that matter. If you think that you're going to get into a market and just be a winning trader from day one, forget it. Your name's not OMNI. No, I'm just kidding. But if you think that you can do that, it's not possible. The only way to learn, literally, in this industry is to lose and find out where you went wrong. Look at your orders. Look at what you've done. Why did I lose money on that trade? Did I place my stop in the wrong spot? Did I panic and get out? Did I even do the analysis properly? All of these things go through your head and they teach you about the next trade that you're going to do. I've never met a guy in this industry that started off winning. Well, I never met one that started off winning to begin with, but I've never met a guy in this industry that stepped in, made a few winning trades, and learned a thing from that. In fact, what I've found is when guys start trading and trade well right off the bat, they think, oh, I was born for this. I knew I was born to be the best trader in the world. Nobody can do this like me. But you know what? That is not true. That's elation. People get lucky. They think they're great when they first start trading, if they get lucky, and they usually end up being the absolute worst students because they've been jaded right off the bat to think they were born with something that's going to make them trade. Let me tell you something, ladies and gentlemen. Some of the smartest, wealthiest people in history, on the face of our earth, in all of time, have spent thousands, millions of dollars, and countless hours on trying to outsmart markets. It is not possible. There is no holy grail. You can go search, you can go join courses, you can buy books, you can do whatever you want. 25 years tells me to tell you there is no holy grail. There's only people who train themselves to trade well and to keep their emotions out and to leave their stops in when they're going to get hit and trade the market like you would anything else. There's a methodology to anything. You know, if a surgeon is going to do surgery on somebody, he doesn't change his methodology every time he looks and decides, well, I'm supposed to take out the spleen. Let me think of something completely different today for taking out a spleen. No. He says, this is what you would normally do if the person is in decent health but needs their spleen removed. This is what you do to take out their spleen. Step B, step A, step B, step C, whatever it is surgeons do, and then it's done. Well, when you trade commodities or any market, you have to have a plan. You have to have a course of action that you take and you stick with. And I'm telling you, you cannot just curb fit everything that you're going to do because it's not looking right. If a market doesn't look right in your analysis, turn your head, find another market. Don't trade for the day. Well, I don't know if I have anything else I want to talk about today because I want to go and have some fun. I've done a lot of videos this week. It's been a long week. We certainly had a nice ride. We only had a one-day loser. Oh, by the way, we did have a gold loser yesterday. You know, they seem to tag me a lot lately. I'm going to stick away for a little while because it seems to, every time I put my stops in an area in gold, you know, gold's a bit fickle lately. It runs down a little further than you expect. It runs up a little further than you expect. So we're going to have to backpedal a little bit on the analysis of the gold and maybe change our approach slightly. Well, we'll see. We'll look at that. But gold lately, I notice, is stopping us out a lot. And other people, I hear people writing in constantly telling me metals are killing me lately. So be careful in that arena. The metals are tough. I know I mentioned flash updates a moment ago. Flash updates for you newcomers. Go to my site, www.futurestraders.com. Register. This way I can get you onto my flash updates database and I can shoot you at the flash updates periodically throughout the day as we're adjusting orders and or taking profits or losses on our trades. If you'd like to get in touch with me, please give me an email. You know, Mikey, which email address are we going to give? Are we going to start using the site, Bob?
Yeah, we're going to start using.
We're going to start using the site. We're going to combine all of our email addresses and put them into our server, which will have a .com extension. We'll let you know what that .com is in a couple of days. Likely we'll be futures traders. We'll decide which site we're going to use. But we have all these Gmail and Yahoo. We got all these crazy email addresses. We're going to combine them to our server, and we're going to give out one address from now on. But until then, shoot me out my email at futuresanalyst@gmail.com. And if you'd like to call me, you know I'm here at all times. Give me a buzz at 718-351-2266. I hope what I'm doing here for you, ladies and gentlemen, have been helping. You know, these lessons, although sometimes seem repetitive and seem a bit trading 101 to you, let me tell you something. These lessons have helped me throughout my entire career. These principles that I follow in my trading have done wonders for me over time. And there's a lot of traders that are telling me it's really, really helping them. So don't forget that we are the other side of what we talk about in every video is placing your stops first. Place them first no matter what guys in forums tell you when they say Oscar doesn't know what he's talking about. You know what? Yes, I do. Yes, he does. Place your stops. Place them first. I have 25 years doing this. Not some of those guys that have been trading for 18 months and tell you that placing stops first is going to get you hurt. Take it from me. I've been here for a long, long time. You've seen my work. You guys are part of my crowd. You know I don't give out anything unless I've worked on it and I know it's 100%. Place your stops first. A stop is your best friend. And you're going to find out a lot about stops being your best friend if you come down to the Mandalay Bay, May 14th, 15th, 16th, and 17th in Vegas. I'm doing the money show. Should be exciting. I got plenty of time to hang out and meet you guys, get to know my crowd. I'm going to do all sorts of analysis. We'll have videos there to go over. We're just going to be there to be students of the market. There'll be a lot of people there that are going to be there to set up their shops and sell you everything under the sun. I'm going there to have a good time and meet my crowd and do some analysis. Let's see what happens. All right? If you're at my YouTube spot, www.youtube.com/futuresanalysts, hit the subscribe button. This way my videos can go out to you just like that when I give them out to YouTube. I think I've covered about everything. Okay, if you're all going to that, if you're all going to come to the show, you know what? Until we consolidate all those email addresses, shoot me out an email at oscarinvegas@gmail.com. Let me know you're coming. I'll be prepared for you. Guys, do I have anything else you want me to cover here? Or can I go have some fun? You're good?
That's it.
Are you guys good? You guys got enough on this video for the weekend? I hope you do. Ladies and gentlemen, don't forget, here is a mantra I want you to yell out every morning when you get up in the morning, every time you're going to trade, and every time you watch one of my videos, because believe me, it helps. It helps the mentality. And you know what that is? You know what I'm going to say. Stops are in, emotions are out.
Futures trading is risky and can cause substantial financial loss.
We do not claim or guarantee that you will profit from the information provided. That being said, I am a 24-year seasoned trader on and off the floors. This is how I've made my living for many, many years. Good luck trading.